Can crypto collapse a currency? Can a cryptocurrency like Bitcoin collapse a fiat currency? And for that matter, can the government behind fiat currency collapse crypto? We'll explore all these premises and more in our next episode of Finance in 5 Cryptocurrency. Now, capitalism is the exchange of goods and services. And the underlying base is what is used as a foundation for establishing value. So look at my background. Some societies use seashells or tulips, and others use precious metals like gold and silver. But in today's modern society, we primarily use paper money, also known as fiat currency. So let's start the clock for the next 5 minutes as we explain the differences between fiat currency and cryptocurrency. Then in the extended version, we'll explore possible outcomes for crypto and government money as we analyze and share our opinions on these exciting subjects. Let's start with fiat paper currency. Fiat means decree by authority, and it applies to currency in the full faith and backing by the government making the decree. First invented by China, and later mastered by the Italians, the Dutch, today the USA, and ironically again today with the Chinese. They're one. Before paper currency, humans liked coins, made from shiny stuff like silver and gold. Now, in the middle days of currencies, humans found ways of cheating. It could be clipping of a coin where a tiny fragment would be snipped off and collected. You take 1% off each coin and over 100 coins later, well, you have a whole new coin in thievery profits. Other thievery was the government stamping the coins, would put less weight in each coin or mix it with other lower cost metals. This deception is called debasing, as you're taking the value away from the base, in this case, some form of precious metal. Since 100 bars of gold are hard to carry, paper currency made sense. But can you imagine that very first trader conversation? What? You want all my gold for a single piece of paper with your emperor's image? Well, everyone is doing it. It's the hottest thing going on the Silk Road. You're going to miss out. All of a sudden, that trader's eyes grew wide and the fear of missing out hit him like a ton of bricks. Or in this case, gold ones. Up until 1971, the USA currency was backed by gold, known as the gold standard era, because many other countries did the exact same. Thankfully, paper currency is foolproof and no cheating exists. See what I did there? Wait for you to stop laughing at your screen. Of course cheating exists. Countries where the penalty is death, people still found ways of cheating. Thankfully, governments don't cheat. Okay, not the same long pause, but we get it. Humans cheat. Germany tried to collapse England's economy in World War II by forging billions of pounds of fake currency and placing it into the global economies, including England. An economic weapon made from pulp and ink. Governments have their own finger in the pot for thievery when they turn on the printing press and issue new currency in the marketplace. Same ink and paper, only this is legal because it's signed by decree of authorization. But it still devalues all the existing money previously issued, a different form of debasing. Expanding the balance sheet and debt is a separate economic topic in a different video. I highly recommend the website debtclock.org. They're not endorsing this video, I just like the way the information is presented, even though the numbers could be super scary at times. Now these twins, Winklevosses, took $1 million from their Facebook settlement profits, and they invested in Bitcoin back in 2013. They bet big on Bitcoin and other crypto early and are now reportedly worth, multi-billionaires. Their thesis was simple, and that cryptocurrency would rival gold one day in total valuation. Believe in a theory and bet big, and you could see your wealth grow exponentially. Of course, there is a side of loss if you bet wrong. Quick primer explaining cryptocurrency. Gold gets mined from the earth. Crypto gets mined from a computer. Just like gold, if it was easy to get, the valuation should be low because of the laws of supply and demand. And I think this concept is the backbone of almost every business's decision made by humans. It's so important, we made an educational video, aptly titled, Supply and Demand. Now, since crypto is intangible, it still needs to be based on something, as you can't just sell air. Or could you? Well, this is a crazy world we're living in right now. Crypto's underlying base is a beautiful technology process called blockchain. And blockchain is a process. You notice I didn't say algorithm? Because it's much more than just a mathematical formula. It also relies on a series of checks and balances for verification and authentication. Issuers add extra digital features and create a token, which typically represents a single unit. Now this token has value in its uniqueness. For Bitcoin, its rarity is in the genius of the original founder's design, their structure of increasing the difficulty to digitally create each new Bitcoin and set a predetermined limit of total Bitcoins that can eventually be mined. It's really brilliant. Incremental difficulty and rarity, limitation or finite number of coins that can be mined should make each coin owned more valuable. Blockchain technology is also revolutionizing the art and collectible world with NFT, non-fungible tokens, which we'll cover in another video. But back to Bitcoin. It's not the only cryptocurrency, or ICOs. An ICO, is an initial coin offering, and anybody can launch an ICO. All you need is the digital process for your token and someone to believe in whatever you're trying to sell. The process is so easy, some technology people created Dogecoin as a goof, using the Shiba Inu as their mascot. And today, that ICO is worth billions. Highly profitable joke for the originators. There have been hundreds, thousands of ICOs created in recent years, and the only single thing that they have exactly in common, they all need to be accepted as worth something by buyers and sellers. In a marketplace, no success. I'm going to toss this conversation to my partner, Adam Myers, who will identify the 8 traits that are found in a currency. Adam?
Thanks, Ian. Let's jump right in. To be recognized as money, a commodity or currency must meet certain criteria. First, it must be durable, which means it has to withstand repeated usage without degrading quickly. Cryptocurrency passes this test. Next, it must be fungible. That means individual units are interchangeable and distinguishable from each other. Gold is fungible because a specific amount of pure gold is equivalent in value to the same amount of pure gold. Diamonds are not fungible because of the different grades and cuts, colors, and sizes. Cryptocurrency does pass this test. Currency should be divisible. Breaking 100 into 250s or 520s should be exactly the same as before. If we use the diamond example from before and it drops from our hands and breaks, the pieces can't be put back together to create the same value as before. Cryptocurrency, however, would pass this test. Currency must also be recognizable. Users must be able to agree on quantities and authenticity. Cryptocurrency does pass this test. Currency must be portable. It must be convenient to transport from one place to another to transact at retail stores. Cryptocurrency does pass this test. Currency should be malleable. Traditionally, coins could be beaten, melted, or printed and given convenient shapes like a coin or a bill. Obviously, a digital currency does not have physical properties that can be shaped. However, if we think about the difference between fiat currency and, say, Bitcoin within the malleability of a transaction, we see some problems. For example, handing someone $1 makes sense, but exchanging private keys and public keys, which are essential in a cryptocurrency transaction, it can get a little confusing. While this is being worked on, cryptocurrency has not solved this issue yet. Currency should be generally accepted. I should be able to pay my taxes, my housekeeper, and buy a steak using the same medium. While the institutions accepting cryptocurrency are increasing, it is still not generally accepted. Cryptocurrency fails this test. Last, currency must be stable. Trading currency for goods or services should maintain a relatively consistent value. Cryptocurrency fails this test miserably. In January of 2017, the exchange rate for Bitcoin was about $988. In January of 2018, it was $13,694. On April 14, 2021, we saw the value skyrocket to $64,899. Nothing stable about it. While cryptocurrency can be used as money with PayPal and Square and Tesla and Visa, the instability of the value creates a nightmare for fair trade, and no digital wallet is hack-proof or theft-proof. If your crypto is stolen, there's no recourse. No insurance company wants to protect this currency because of the risk. The US dollar is the most successful of the fiat currencies used throughout the world. The Federal Reserve is desperately trying to maintain the dollar hegemony, though it does have a high likelihood of failure if history is any indication. So this build-up period for crypto could be its rise to dominance in the event of the collapse of the dollar. However, Given crypto's decentralized and unregulated nature, it's unlikely governments will adopt it as a reserve currency. There's no way to manipulate it or create credit. This may be why we hear Bitcoin is the default currency for criminals and drug dealers.